This quarter's edition of the Australian Investor magazine is about reminding people of diversification. The world is back in a better place. Inflation is back to low levels. Economic growth is still reasonable. Unemployment is low in most places and interest rates are coming down, all of which is good for everyone and good for investments. But there is new uncertainty now. The US government is embarking on a lot of change already. Their plans for tariffs and deportations do present some risks to inflation in America. There are all plans for tax cuts and deregulation could be good for inflation, but there are also consequences of these policies for growth. Being diversified in that environment is one way to manage the uncertainty, which is pretty elevated at the moment. They've had about a decade of fantastic performance from the US stock market, but that has left it, in a fairly unusual position of accounting for about 70% of the world index. And a lot of that performance has come from a limited number of stocks, the Magnificent Seven that people are pretty familiar with. So that concentration is a risk as well on top of the other risks. And so considering other markets is something people perhaps might want to do. In Australia, some diversification across the stock market is a good idea as well because we've had a fairly strong run in banks. Other parts of the market which have been left behind a little bit might be worth thinking about: the resource sector, the real estate trust sector, some of the consumer sectors. And then beyond shares, a way to diversify is to have some fixed interest-bearing investments. So they're ways that investors can manage their wealth, spread the risks and hopefully have a smoother run in this period.